Good evening and welcome to Money Minutes. My name is Lisa Pallavi Barbora, and today I'm going to talk to you about some long-term fixed income investment options for retail investors. Investors are really spoiled for choice when it comes to fixed income, especially in long-term investments with at least 3 tax-free bond issues open at the moment. NTPC is in the market with a 1,000 crore issue of tax-free bonds. Then there is India Infrastructure Finance Company Limited, which will start its issue on the 9th of December. And of course, Hudco is also in the market with around a 500 crore issue for tax-free bonds. Now, tax-free bonds essentially are issued by government entities, and the unique feature is that the interest that you earn on these bonds is completely tax-free. You don't have to pay any tax on whatever interest you earn on these bonds, which is a great option for retail investors. If you look at what kind of returns they are offering, that's also pretty high. So the NTPC issue is giving you a return of anywhere between 8.66 to 8.91% per annum. So is the IIFCL issue. It's giving you the same return, and also Hudco is giving slightly higher return of around 8.76 to 9% per annum. Now, these are very good returns to have on a per annum basis. Just to give you an idea, if you were to invest in any other security where you were paying tax, then the kind of comparable returns that you would have to make to match up to these tax-free bond issue returns, for an 8.66 you would have to invest in a security that gives you at least 12.5% before tax, and for earning 9% you would have to invest in an issue that gives you at least 13% before tax if you fall in the highest tax bracket. Now, that's a big ask. So at least on the return front, we know that these tax-free bonds are giving you a very, very good option. The next comes how to look at it from a risk perspective. Now, like I mentioned, these are issued by government entities, so the risk is very low. The risk of default or the risk of non-payment of interest is very, very low. You can be rest assured that you will get your interest on time, and you will get your principal back at repayment at the maturity date. So NTPC and IIFCL both are AAA rated. Hudco is AA plus, but nevertheless it is a quasi-government entity, and hence the risk of default is very, very low. The third aspect is the liquidity. Now, this is the aspect where these bonds don't score very high. So they come with maturities of 10, 15 or 20 years. It means that you will have to remain invested for the entire duration of 10 years, 15 years or 20 years to earn this kind of high return. Now, there is no option where you can redeem sooner. However, the bonds are going to be listed on the stock exchanges, which means that you will be able to exit in the secondary market if you do need the money in the interim. But that depends on the volumes of trade in the secondary market now, which are not very high, and on any given day they could be quite low or quite high depending on the demand on that day, and also you may not get the price that you want. So there is a slight bit of price risk in exiting through the secondary market. So really these are buy and hold kind of bonds. Nevertheless, it is a very good option on the return and on the risk front. These are typically long-term investment options. Everybody has a long-term allocation to make in their portfolio. If you are risk averse and don't want to go the equity route, then for your 10, 15 and 20-year requirements, look at tax-free bonds as an option. They are very high return. 9% return is a very, very good return right now, and you may not get that in future. That's all from me for this edition of Money Minutes. Do stay tuned for more investment ideas. Thank you.